John, the reaction here to shares of Caterpillar and any big conglomerate with ties in China, what does that tell you about where the market is on the global slowdown story?
Sarah, I'd have to think that it shows that the market is responding very healthily. Essentially, you have slowing occurring. We have truces in terms of the government shutdown. We have a truce in terms of the trade war with China. We don't have resolution, and without resolution, slowing would seem to be a thematic that is significant here and will be acknowledged whenever the market starts focusing on that instead of positive developments that may be forthcoming out of the truce situations that are under negotiation.
Scott, what does it signal to us about the rest of earnings season and where we are so far and how the market is set up for it?
Well, Sarah, I think, the earnings season so far has been fine, but the problem here really, you could say for the last year and a half, is the Fed going to make a mistake and is global growth going to slow? So really, we've seen the Fed issue, at least for the time being, kind of taken off the table. The probability of them making a mistake, at least soon, seems to be less. So the market's laser focused on this global growth story. You heard it from Cat. You've heard it from a lot of other companies this morning, and certainly the industrials, whether it's trade, global growth in general, industrials are going to react. Now, saying that, they've been one of the top performers on a year-to-date basis. We certainly expect better performance out of the industrials this year than last year. But global growth is the story right now. That's what the market's going to be paying attention to. I don't think so much what the absolute number is on fourth quarter earnings. It's all looking ahead.
Yeah, John, broaden this out a little bit because Congress and the president still have to do something final in 3 weeks. That hasn't happened yet. What's the market pricing in as far as what happens in 3 weeks?
Well, I think that the market is pricing in some weakness in here because we don't know exactly how it's going to turn out. The president is saying he could still pull the emergency lever, so to speak, calling to fund this wall with emergency funds. And the market doesn't want to see that. The market wants to see a resolution. And we think the probability is higher to get resolution with China by the end of the first quarter. But the negotiations in Washington likely to drag out. But we don't expect a bad ending on this. We do think there will be some kind of deal made in Washington because neither side wants that in a year where we're headed towards 2020. Big presidential election. No one wants to take the kind of blame that a government shutdown extension or going for the national emergency lever, so to speak, would be utilized.